I guess let's start with sort of that retail sales data. I know what we hear from the government does not always exactly square with what we hear from retailers. And we focus a lot on the government data and that month over month change, whereas for retail, we're often looking at the year over year. Still, it's the most latest data that we have, I guess, in aggregate. So what should we take from that when we're trying to discern how the consumer is feeling and, more importantly, spending right now?
Yes, I think it's very much a mixed backdrop. So I call it more as an evolving discretionary backdrop. So you look on the positive side, some categories like grocery sales are doing really well. Online non-store retailers also had a strong month in February. And then there's also areas of weakness such as consumer electronics, home furnishing, sporting goods. So it really is very category specific, some of the challenges you saw in February. And I think the challenge here is that you came off a very strong holiday season, and January, February have been softer. Some factors like wildfires, weather, I think have weighed on demand. And then we've all seen weaker consumer sentiment out there. So I think that's what makes it harder to read whether what we're seeing is more transitory versus, a big step down in spending. I'm still in the camp that I think it's transitory. Maybe there's some parts, some economic weakness as well. But I think we need more time to figure out the new trend.
See, and it's so interesting because when I'm looking at the consumer and you look at what the retailers have told us, so many of them, even though holiday seems like a very long time ago, reported very strong holiday sales. And when I spoke with executive chairman of Dick's Sporting Goods, Ed Stack, he said, we haven't seen a meaningful slowdown in our consumer, but still they guided sort of lower than expectations, right? He said to me, quote, it's silly to guide above consensus when no one else is. So is what retailers are saying more fear than reality?
I think it depends on the retailer. So you look at Walmart had a strong, I think they had a good February. Costco, we get their monthly sales, and it was a very robust February. But then you have players like Target that had a soft February, and they called out, weather is potentially weighing on demand. Where in their business, they saw markets where weather is better, a big improvement, a big positive, big change in apparel trends versus markets that did not have good weather. So that's what I'm saying. It's very much a mixed backdrop. But the winners out there, like Costco and Walmart, I think continue to do quite well. But maybe on the margin, some of the discretionary players like Target are struggling a bit more.
When we're talking about grocery prices, I know you mentioned that was a strong category in the report. Prices are still extremely elevated in that area. And we know, obviously, we have some interesting outliers like eggs, which, of course, we sort of have different issues with because that's a supply problem rather than a tariff issue or otherwise. But how can you look at that with a critical eye, saying, yes, retail sales and grocery are higher, but so are prices? Because then you look at dining out, and that took a pretty big hit in the month. So that suggests the consumer is pulling back.
Yeah, no, I think that's fair. You look at February, grocery sales are stronger while restaurants are weaker. So there could be a shift to eating more at home. And players like Costco and Walmart have called that out, that they're seeing more at-home consumption. So I think there is that dynamic. But I go back again to weather. Weather could have had an impact in both January and February, weighing on restaurant sales. So I think we need a little bit more time to see how the trend develops in the coming months. But the leading players have called out that they've seen benefits for more at-home consumption. And if you go back, post-pandemic, last year or two, it's been very rare that restaurant sales have lagged grocery, and you've seen that in 2 of the past 3 months.
I know that you've mentioned Walmart and Costco as potential winners, and obviously even those stocks considered staples have gotten hit. So perhaps if you want an entry point, now is the place to be if you see that recovery happening. What about in your discretionary names? What could be winners there?
Yeah, so I think near term, Ulta Beauty, I think that can be a winner as I look over the next few quarters. So if you go back to last year and the year before, Sephora opened up a ton of stores on top of them. So starting to move further and further past those openings. So we think Ulta numbers have bottomed, and we think they're on the path to getting back to 3 to 4% type comp growth as we look out to FY26. And this could be a $435 stock. So I think there's tremendous upside here. Great management team. It's still a great box, and they have really good innovation stores. So I say that's probably my high beta discretionary play. And then Target, if you have a 12 to 18 month horizon, near term is very challenged for Target. You have now some tariff risk out there. Stock is trading at trough valuations. You have close to 4% dividend yield. So those who are willing to take a little more risk, I think Target, could have as much as 50% upside over the next 12 to 18 months. And then on the consumer discretionary side and on the product, the CPG side, a company called Shark Ninja,
Okay. Yep.
I think they can be quite attractive as well.